Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard Macbeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be on your show.
What did the U.S. Fed do today about interest rates?
So they announced there'd be no cut, there'd be no change in interest rates, and the rates are 2.25% to 2.5% on the Fed funds rate, which is what they control, and that's as expected. But so that wasn't really any surprise. But the big thing that people were looking for was a change in the language. So they issue a statement, which is 4 paragraphs long, and they had been saying that they'd be patient in deciding what to do, because not that long ago, people were thinking they'd have to raise rates more, and then more recently, people were thinking they'd have to cut rates because the economy is a little weaker. And so they changed the language. So people look at every word and every paragraph and every line, and they changed the language to from patient. They removed the word patient, and they said they would be closely monitoring the situation, which everybody is taking as a signal that they're getting ready to cut rates. So they also said they'd be closely monitoring the risks to the outlook. So there's been some sign that the economy might be slipping a little bit, maybe possibly even going into recession after 10 years, and then the Fed would start to cut rates. And everybody's expecting that they will cut rates at the next meeting, which is coming up in July.
With no change in policy, or no change in the actual numbers, did that affect the markets at all?
Well, the stock market initially was up quite a bit this morning, and now, as of, half an hour after the announcement, the market is slipping back to basically unchanged. So I think people, were not entirely happy with the decision. And of course, it's kind of crazy. I mean, I could go back quite a few years in this. We used to watch every Thursday what the Fed did in terms of money supply. They used to, instead of targeting interest rates, they used to target the money supply. And every Thursday, we'd watch to see how much M1 and M2 grew. And if it grew too fast, then the market would sell off because people were worried the Fed was going to restrain the growth of the money supply. And of course, that was all a waste of time. It was, it didn't have any impact on the market at all. And I find this quite similar today. Like this debate over whether they should cut rates or not we spend way too much time on it, because in reality the Fed is following the market. It's not leading the market. So if they cut rates next month or later this year or next year, the forecast is, by the way, for several cuts, a couple this year and several more next year. What it means is that the Fed is following a weak economy. And what basically that means is that it would be a recession. In fact, there's only been 2 instances where the Fed has cut rates in this kind of manner without a recession, going back to 1950. So if people get excited about a rate cut, they might be missing the main point of which is if they cut rates, it means the economy is already quite weak and possibly already in a recession.
Does that send a signal that almost makes it inevitable that you'll have a downturn?
Well, it's 10 years, and this is the longest recovery since the Second World War. There was one very similar 10 years, but we've just surpassed that. So this started 2009 after the worst financial crisis since 1930s, and the economy's been in recovery ever since June of 2009, so 10 years. And but it's been a very subpar recovery. It hasn't been nearly as robust as the average recovery during that last 50, 60 years. So it could be longer. It could go a little bit longer because it hasn't been very, very robust. But we're on borrowed time, basically, and there will be another recession, and it's probably not that far off. Anything like a global trade war or a breakout of war in the Middle East or something like that with Iran, any of those things could tip the U.S. economy into recession quite easily.
Isn't it ironic, though? Lower rates are supposed to stimulate an economy. However, aren't banks stingier with their money because they're worried people will default in bad times? So the lower rate doesn't help?
Lower rates don't help nearly as much as people think. So because rates are already really low, 2, 3, 4%. Historically, those rates are way below the long-term average. I look back in the Depression in my research into my book, and the lowest the government of Canada bond rate got to was 4% in 1932. So our rates have been below that for, the 10-year government bond rate now in the U.S. is 2%, and it's a little bit higher in Canada, but they've been well below 4% for a long time now. It hasn't resulted in a very strong, robust economy. The housing market, especially in the U.S., has been very weak in terms of a recovery. Normally, when you have such a collapse in the housing market, which is the most important thing for interest rates, you'd have a really robust recovery, but it's been quite tepid. And there's even still 10% of the homes in the U.S. that have mortgages on them, the homeowners are underwater on their mortgage. So we still, even 10 years after the global financial crisis, we're still struggling with the aftermath of that major historical event. After
you lose all that equity in your home, is it possible to have a decent retirement? I know in BC, where a lot of homes have lost tremendous amounts of money, a lot of people are worried that their retirement is not going to be what they thought it was going to be.
It's interesting you bring that up because I don't have the exact data in front of me, but anecdotally, especially in the U.S., but also in Canada, people are delaying, if they have the choice, they are delaying retirement. Now, whether it's for financial reasons, in Canada, it's probably not so much for financial reasons because people have been enjoying this wonderful housing bubble, so they feel wealthier. What's the slogan? You're wealthier than you think. But in the U.S., they're delaying their retirement because they need the money. And so even though Medicare in the U.S. after 65 is quite generous and it's free, people still have debts left over. I saw a thing the other day, I find this hard to believe, but the average 55-year-old now still has student loan debt, which I guess part of that is because student loan debt is easier to delay the repayment of than some other debts where the creditor is pounding on your door demanding repayment, and maybe the interest rate's lower too. But so people are. I had an interesting meeting in Toronto a couple of weeks ago with one of the owner of one of the largest insolvency bankruptcy trustee agencies. I think they have 20 offices, and he was saying that one of the surprising things is how many people over the age of 55 have to come and see him, and two reasons. One, they don't adjust their lifestyle even when their incomes drop due to retirement or being laid off or whatever, and they keep carrying on as if they still had the same income. And the second reason is helping their children too much. There's a big problem with helping children get, down payment for a house or whatever, and that gets them into trouble. And it doesn't take much to get people into a situation where they have to go and see the bankruptcy trustee.
Is that a good thing rather than declaring bankruptcy, having a consumer proposal instead?
Consumer proposals are much more beneficial for the creditors as well as the borrower, because then they're much more common. And the reason is that you can make a deal. He said that the average is about a third. So if, say, somebody owes $50,000 in credit card debt, they can't pay it. There's obviously things have changed. They have no chance of paying it back. The proposal will be that they'll pay $17,000, or about a third of the debt, and the creditors vote on it. If they agree, then over 5 years, you pay back $17,000. And the bankruptcy trustee monitors the situation to sort of keep you on track, gives you a little guidance, gives you a little coaching, if you like. And the reason the creditors, my question was, why would the creditors agree to give up all that money? They're only getting 17 when they're owed 50. And, well, the answer is that if they vote it down, then the person just declares personal bankruptcy, in which case they get zero. So in bankruptcy, the creditors get zero. In proposal, at least they get maybe a third or something like that.
Plus, if it's a credit card that's driven that, they've probably already made money on it with all the sky-high payments made up to that point.
Well, for sure. I mean, people don't stop offering there's stories. The same bankruptcy trustee, his partner told me that he's met people that have $200,000 in credit card debt and never had a regular job. So how did they even get a hold of those credit cards? It's obviously it's a good business for the credit card companies, and they just write off the bad debts and consider it a cost of doing business. Now, in the next recession, that'll change. So in the next recession, then obviously these debts will loom larger. But as long as there's no recession, the lenders are happy to carry on like that.
Yes, and I would think the reason why 55-year-olds still might be carrying student debt is that bankruptcy will not erase a student loan. You still owe it.
In Canada, it does erase it. It does erase, the bankruptcy does get rid of everything in Canada. So you can get a clean slate in bankruptcy in Canada. In the U.S., the rules are different, but in Canada, you can, and it's actually quite, here we get into this talk about bankruptcy. Isn't that interesting? But if you make less than about $2,000 a month, you're supervised in bankruptcy for about 9 months, and if you make more than $2,000 a month, you have to pay half of the excess for 21 months. So that's supervised by the bankruptcy trustee, and then you're done in terms of payments. But the trustee told me that almost nobody has much left when they get to the point of bankruptcy. Basically, there's usually no money left. So and then of course there's a longer period when there's kind of like an asterisk beside your name. You can't apply for credit anywhere for a number of times. But in terms of repayments, it can be all over. If you're a first-time bankrupt, it can be all over in as little as 21 months.
We'll have more with Hilliard Macbeth right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, the federal cabinet has approved the twinning of the Trans Mountain Pipeline. Are they celebrating in Alberta, or are they worried more court challenges will happen again?
I think they're more worried than celebrating it. It's about a 600,000 barrels per day increase from the current 300,000 to approximately 900,000. And the cutbacks that were introduced by the previous Alberta government before the change in government after the election are still in place. So there is an excess supply of product that would like to be shipped. But even if they started construction, as the announcement said might happen as soon as this summer, it would still be 2021 or 2022 before the expansion would be operating, and that assumes that there aren't any more delays. So I think the approval is in place, but there are some people that are suggesting that they're going to still keep protesting during the construction. And of course, the federal government would also like to sell. So they bought the company that operates the current plan, the current pipeline. Now that they have the approval in place, they would like to sell the whole thing to private sector. They don't want to be the owner and operator of the expansion of the pipeline. So if you want to buy a pipeline, you could probably get a really good deal right now.
Well, I hear that two Aboriginal groups have expressed interest in buying the pipeline, and the Prime Minister has said that's fine with him. If they want to buy 100% of it, he's cool with it. And I'm sure Ottawa probably would even provide the financing to do it if they wanted.
I think so. I think you can make a really good deal, and of course the Aboriginal groups. I don't know. I really don't know. But my impression is that they're not all unanimous, right? Some of them are in favor of the pipeline. Some of them are against the pipeline. So, it would work if all of the Aboriginal groups could get together and say, we want to own this pipeline and run it. But
well, where the pipeline is going to run, those Aboriginal groups have approved it. The opposition is coming from people who live hundreds, if maybe not 1,000 miles away.
Yeah, well, and of course it's got to be. So then, it's not so much the pipeline. They've already done one expansion of this pipeline, and it goes through Jasper, and we watched that construction process. And when the construction was over, you didn't even know there had been an expansion of the pipeline. There was absolutely no impact at all on the community. And this one will probably be similar. That where you get the bottleneck and where you'll notice it is in Burnaby and in the harbor, where instead of one or two ships a week going out, it'll be one ship a day. So it'll go from one or two up to 7 ships. And these ships are about 80,000 tons, which is fairly big. Not as big as the big ones are 320,000 tons. The big ones are 4 times as big, but the biggest one they can get into the harbor, or through the harbor to Burnaby, where the terminal is about 80,000 tons.
Yeah, I wonder though the impact of one extra ship a day. If you go to the website marinetraffic.com, you can see thousands of little dots, live time radar tracking by satellite of where every ship is, and I just wonder if adding one more dot a day, into the Strait of Georgia, how much difference would that make actually to marine life or the ecology? One dot doesn't seem like much more.
And if you, on the housing bubble file, which of course I've been involved with now for 4 years, the talk always was that Toronto and Vancouver were world-class cities, and therefore their extremely high house prices were justified because they're world-class cities. Well, if you look at world-class cities like New York and London and Singapore and wherever else, all of them have much larger numbers of traffic, marine traffic going in and out of their harbors. So if Vancouver truly wants to be a world-class city, they'll have to live with some more traffic. But the other opposition against this is not so much the technicalities that we've been talking about, is more just the idea that approving this creates more consumption of oil products, and the people that are against it think we should move away as quickly as possible to less consumption of oil products. So they think of every pipeline that's approved as being moving in the wrong direction. And so those people aren't going to change their minds. Even if you could convince them that the ships were totally safe and the pipeline was totally safe, they're not going to change their minds about that.
The Prime Minister did say any profits from the pipeline would go to developing alternative energy. Was that a good move on his part?
Yeah, I think so. And the Parliament also the day before said that the climate change is a national emergency. So on the one day they said it was a national emergency, and then on the same day or the next day they said that they were going to approve the pipeline. So it's very difficult. It's like you'd have to believe that there is it was in Canada's interest to cut back on our production, while other countries in the world are expanding their production dramatically. Like, the big consumers are going to be in the future India and China. And China now is moving fairly quickly towards electric cars, for example. But I don't know about India. The projections for India are, of course, they don't use that much oil now because they don't have very many automobiles that run on oil. So if they follow the normal trajectory of a developed country, they would be using many, many, many times more oil 20, 30 years from now than they are today. So that's where the big change is going to happen. If all of those people in India and China go with electric and just sort of skip over the automobile phase, the combustion engine automobile phase, then that'll make a huge difference, and that'll be very bad for the outlook for the Alberta economy, because a very large amount of the economy in Alberta and in Canada, for that matter, is based on exporting this oil.
Also, a lot of the people opposed to pipelines now are against the export of liquefied natural gas, even though it's been pointed out that probably will be used to replace coal or other dirty means of generating power. And when it comes to fossil fuels, natural gas is pretty clean. Yeah,
well, they argue that there's this methane gas released when natural gas is produced, and I don't know enough about it to know if that's correct or not, but that's their argument against it. But on the surface of it, what you say sounds correct, that it's an improvement to go from coal to natural gas, a big improvement. And of course, if people are moving towards offshore wind, which is a big thing, onshore and offshore wind turbines, they're going to need natural gas as kind of like a transition period, because they can't go 100% to renewables.
And you also need a backup for times when you have no wind. Britain ran into that last year, where they went 2 or 3 weeks with no wind and in some places no power.
Yeah, and the thing with natural gas, unlike coal, a natural gas plant can be shut down and started up quite quickly, like within a very short period of time. So the coal-fired plants, they have to keep producing electricity even when there's no demand for electricity, which gets fairly tricky because it has to be balanced. The grid has to be balanced, but so somebody has to take that electricity. Whereas with natural gas, they can shut them down and start them up, shut them down. They can do that several times a day. So natural gas is perfect, kind of a buffer for the. And eventually, you could go more heavily into wind and solar when the battery storage or some kind of storage, doesn't have to be battery, but some kind of storage facility is developed. And the most popular storage right now is what they call a ski lift. So you get a bunch of water, you lift it up when there's excess electricity to a higher level, and then you let it drop down through the turbine to generate electricity when there's more demand for electricity. So pretty rudimentary, but it works.
We'll have more with Hilliard Macbeth right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, anything new on the Canadian housing front?
Well, today, this being Wednesday, June the 19th, the Terranet National Bank Housing Price Index came out, where there's two main indices. There's the Canadian Real Estate Association and the Terranet National Bank. And the Terranet tries harder to be apples-to-apples comparison. So they try and find a house that sold 3 years ago, and then the same house sells, and then they try to adjust it for any renovations that were done and that sort of thing. Because, of course, the problem with house price indices, one of the problems with them, there's many problems, but one of the big problems with them is the mix. So if you get a bunch of expensive houses selling in a period, or you get a bunch of condos and so on, and there's nothing really solves that issue. But at any rate, it came out today. It's a 3-month average. There's a lag of 3 months, so but with all of those caveats, there was a small increase in the national price for the first time in quite a while. I forget how many months. 9 months, I think. They've had 8 months of declines every month. Now, there's always an increase in May because it's the spring selling season. So it's not to be necessarily celebrated too much. And it wasn't even across Canada. So Toronto had an increase, but Calgary, Edmonton, and Vancouver, I believe, for sure Vancouver had quite a large decrease in prices. And I think Calgary and Edmonton also had a decrease. Hamilton, Toronto were fairly strong on the upside, and the rest of the country was either flat or down. So it isn't. We don't know what's really happening. Obviously, my opinion is that we're in the early stages of a major correction in the housing prices, and I suspect that's what's going to happen. But in the spring, you get these people, and there's a lot of people that believe in the soft landing scenario, where that what's been happening since 2016 and 2017. In Toronto, single detached houses are still 10% lower than the peak in April of 2017. So there's a whole bunch of people in Toronto that believe that that's it. The soft landing has arrived, it's over, and now we can start going back up again. That could happen, but the reason it probably won't happen is the household debt level is at record high levels and keeps growing. So if the debt becomes too heavy to carry, then it's very difficult for house prices to go up, and probably the correction needs to go a lot further in Toronto. But in May, there was a little uptick in Toronto is the short version.
Hilliard, thank you so much for being on the show.
Nice to talk to you again.
My guest has been Hilliard Macbeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @Housestreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.